This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
Welcome back to TradeFlow TV. You know the drill. Markets move fast, and if you're not ahead, you're under.
We just witnessed a black swan event in the energy markets. Let's get you caught up. The 60-second commodities flash. The OPEC shocker. In a move that has sent shockwaves through the industry, the UAE has officially quit OPEC. This surprise exit shatters the cartel's unified front and signals a massive shift in how Middle Eastern crude will be priced and traded moving forward. Crude pauses at 111. Following a 7-session rally, Brent crude is hovering near 11 BBL. While the UAE exit caused a momentary dip, the ongoing stalemate in the Strait of Hormuz continues to keep a massive floor under global prices. Gold under pressure. The safe haven is feeling the weight of a powerhouse US dollar. Spot gold is slipping toward 4,600 Aussies. Even with Middle East tensions, hawkish Fed bets are forcing investors to choose the yield of the greenback over non-yielding bullion. The fertilizer crisis. New warnings today from economists suggest the Hormuz blockade is now hitting global food security. The strait isn't just for oil, it's a critical artery for sulfur and minerals used in fertilizers. A supply shock here means food prices could remain elevated for the next 3 to 5 years. Nickel's margin squeeze. Costs for nickel producers like Nickel Industries are surging as sulfur prices jump to $570 a ton. While sale prices are up, the cost of production is rising just as fast. Now, let's go deep into the UAE OPEC exit and the new trade liquidity map.
The hottest topic? The United Arab Emirates' surprise decision to leave OPEC and its massive impact on global market structure.
Forget the blockade for a second. The real story today is the geopolitical uncoupling of the UAE from OPEC. This is a fundamental reconfiguration. This isn't just a political spat. It is a fundamental reconfiguration of global trade liquidity. Here is why this OPEC exit is a game changer for your portfolio. First, the end of managed liquidity. OPEC has always acted as the world's central bank for oil, managing supply to keep prices stable. With the UAE, the group's third largest producer, leaving, that stability is gone. We are moving toward a free market for Middle Eastern crude. While this sounds good, it means volatility is about to explode. For traders, higher volatility means higher margin requirements from clearinghouses. This ironically drains liquidity out of the system as it becomes more expensive to hold positions. Every trade now costs more to maintain. Second, the battle for market share. The UAE has invested billions in increasing its production capacity to 5 million barrels per day. By leaving OPEC, they are free to flood the market to maximize revenue before the energy transition takes full hold. This creates a race to the bottom scenario. If the cartel fragments further, we'll see a surge in physical trade liquidity, more oil moving, but a collapse in price liquidity. It will be harder to find stable bids. Third, the fertilizer to food liquidity link. The UAE's exit comes just as the Hormuz blockade is choking the fertilizer trade. Without the stabilizing influence of a unified OPEC to negotiate regional security, the risk to maritime trade in the Gulf increases significantly. Farmers are curtailing supply because they can't finance future crops, leading to a long-term stagflationary trap, where growth slows but prices climb.
The TradeFlow take. The UAE's exit is the first domino. We are entering an era of every nation for itself in the energy markets.
Expect the war premium on oil to be replaced by a volatility premium. The winners will be those who can provide their own trade finance.
Traditional banking models are struggling to keep up with $100+ swings. Stay liquid, stay sharp. See you on the next one.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.